The latest figure for Amaze Holdings Inc., trading under the ticker AMZE, shows the stock at 0.4950 USD as of the moment of this script generation, marking a change of minus 0.0010 USD or minus 0.20% in today's intraday trading. This movement is negligible on the surface, but given the massive volatility that has been the defining characteristic of this stock for the better part of the last year, a nearly flat day, even at these sub-dollar levels, is an event that requires a closer look. Most people following AMZE are likely focused on the fact that this is a company with a 52-week range that goes from its current basement price all the way up to over $20, a dramatic collapse that has burned many retail traders who might have been using platforms like Robinhood for their online investing and looking for rapid gains. However, the unexpected angle here, the one that should compel a serious investor to pause, is not the loss of value, but the recent highly strategic asset acquisition of the food channel. This isn't just another press release. It's a move that radically attempts to re-anchor the narrative of the company away from its problematic financial past and towards a specific high-value vertical within the creator economy. The general belief about AMZE right now is simple. It's a microcap stock, a shadow of its former self, teetering on the edge of irrelevance, potentially facing delisting, a common outcome for stocks that have fallen so far so fast. The reality is more complex and certainly more interesting. The market's reaction to this acquisition has been muted, a mere blip on a chart defined by a relentless downtrend, which creates a fascinating tension between the firm's ambition and investor skepticism. This company is attempting to pivot from what was, in part, a niche wine operation, the fresh vine segment, combined with an e-commerce platform, the Amaze software segment, into a more focused, creator-powered commerce engine. That's a significant shift, and the market is essentially saying, "Show me, don't tell me." The low volume and minimal price movement today suggests that institutional players, the kind that utilize sophisticated fidelity brokerage or interactive brokers trading platforms, are still on the sidelines, waiting for tangible results from this new strategy. The daily swings in AMZE stock are less about organic buying and selling and more about technical trading and the psychological effect of such low prices. When a stock is trading below $1, a small capital inflow can trigger outsized percentage gains, which is a siren song for speculative traders who engage in self-investing on platforms like SoFi Invest. Conversely, any selling pressure, even minor, can send it plunging to new lows, as the bid-ask spread at this level is notoriously thin. The institutional activity, as evidenced by recent 13F filings, shows minimal ownership and significant position reductions by major holders, though there are a few new small positions popping up, which could be funds looking for a deep value turnaround play or simply accumulating shares for potential corporate action. The earnings reaction for AMZE has been consistently negative, which is understandable given the company's history of substantial net losses, as seen in their financials, millions in losses against relatively minimal revenue. The market is not rewarding their strategy of growth through perpetual fundraising and acquisitions until they demonstrate a clear path to profitability. The constant stream of public announcements, such as the strategic partnership with Adobe Express to expand into India, or the partnership with gaming influencers, are classic examples of an aggressive marketing strategy designed to create buzz where financial fundamentals are weak. They are trying to build the perception of a growing creator platform integrated across diverse social media platforms like YouTube, TikTok shops, and Twitch, where creators can sell anything, anywhere. But until this translates into sustained high-margin revenue, the stock price will remain anchored by the reality of their balance sheet. Let's expand on the business model. Amaze Holdings operates an end-to-end platform for creator-powered commerce. Think of it as a tool set that allows creators to design products, set up an e-commerce shop, and manage fulfillment, all integrated into their existing social media presence. The fresh vine segment, which is centered on low-carb, low-calorie wines, has always felt like an odd pairing with the e-commerce software side, contributing to a lack of clear market identity. The acquisition of the Food Channel is an attempt to create a powerful vertical, merging an established content brand with their software tools to monetize a massive community of food creators. They want to create shoppable content experiences, moving past simple affiliate links to true commerce. The vision is to reduce the friction for a food creator, say a cooking personality, from making a video to selling branded merchandise, cookbooks, or even food products directly to their audience. This model is highly scalable if they can successfully attract and retain a critical mass of high-value creators and execute the technology integration flawlessly. Older reports show a company attempting to find its footing with several corporate actions including share offerings, which is often a necessary but dilutive process for microcap companies attempting to raise capital. Their past performance, particularly the sharp fall from the $20 highs, reflected disconnect between initial investor enthusiasm, perhaps driven by a perception of their position in the growth of online investing in the creator economy, and the harsh reality of their cash burn. Now let's turn to the future outlook, which is where the tension between expectation and reality is most pronounced. The expectation is that the creator economy is a massive, high-growth sector, and AMZE has planted a flag there with their platform and the recent Food Channel acquisition. The reality is that they are operating in a fiercely competitive space. Platforms like Shopify already have robust ecosystems, and dedicated creator platforms are constantly emerging. The true catalyst for AMZE will not be a new partnership, but the announcement of a massive recurring revenue contract or a significant shift to positive operating cash flow. Possible scenarios range from a successful execution of the Food Channel integration leading to a spike in subscription revenue and a positive surprise in their next earnings report, scheduled for mid-November, to the more bearish scenario of continued losses, further dilution via capital raises, and an eventual delisting. The risk is immense, primarily tied to their cash position and the burn rate required to sustain their growth and acquisitions. The opportunity, however, is equally substantial. If they can monetize the food creator space effectively, leveraging the Food Channel's brand loyalty, they could achieve a successful pivot. The market is clearly not pricing this potential in right now, which is a classic contrarian setup for a high-risk, high-reward stock. For those who manage their own capital through an individual brokerage or use intelligent portfolio services offered by firms like Schwab Intelligent Portfolios, this stock represents a purely speculative play on management's ability to execute a difficult turnaround in a highly fragmented industry. We must also consider the general economic pressures, as an environment of higher interest rates tends to punish cash-intensive, unprofitable growth companies the most, making it harder for them to raise fresh money. The broader trend of online investing is moving towards consolidation, with major players like Fidelity and SoFi expanding their offerings, which can put immense pressure on smaller single-focus platforms. Comment below how many shares of Amaze Holdings Inc. you currently hold, or if you consider stocks trading under $1 to be fundamentally uninvestable. Your personal portfolio strategy, whether you prefer the stability of a diversified fund like Fidelity ETFs or are actively trading on Robinhood stock trading, will dictate how you view this specific risk profile. In conclusion, the live, low-volume price of AMZE at 0.4950 USD is a perfect representation of the market's current indifference to a company in the middle of a high-stakes, dramatic corporate pivot. The expectation, fueled by the aggressive acquisition of the Food Channel and various creator partnerships, is that AMZE is setting itself up to become a major player in the commerce aspect of the creator economy. The reality, as reflected by the depressed share price and minimal institutional interest, is that this is a company with a history of significant losses and a massive, painful fall from its prior highs. The market will only reward the new narrative when the company can demonstrate a fundamental shift in its financial health, turning strategic moves into sustainable profits. Until then, AMZE remains a textbook example of a speculative microcap where the ultimate reality for investors will be decided by flawless operational execution and a sharp reduction in cash burn, which is a considerable challenge for a company currently so far away from that goal. Disclaimer and final call to action. Finance disclaimer. I am not a financial advisor. The information provided in this script is for informational and educational purposes only and should not be construed as financial advice, investment recommendation, or an offer to buy or sell any securities. Investing in stocks, especially microcap and volatile stocks like AMZE, involves a high degree of risk and may not be suitable for all investors. You should always conduct your own research and consult with a qualified